DR fam, how's everybody doing? Hope everybody had a great Friday into the week. Looking forward to a great weekend. And overall, hope everybody had a just a great week. All right, so let's talk about DR today. And like we've been doing, let's talk about a little bit more of a high time frame analysis here. And we this is our daily chart that we've been using in the past few sessions. And if we look at this, this red candle is today's candle. I'm calling it a doji candle, which basically means it kind of basically ended where it started. I know we had a little bit of movement, and there is a little bit of a candle body there, but to me, that's basically a doji candle, which means we went up, we went down, and then we basically ended up kind of where we started, right? Again, a little bit down from where we started, but not a not an aggressive candle at all today. So other side of that, you see, we still had this candle that yesterday's candle that went down into that bullish fair value gap. Today's candle did not go back down there. I mean, we talked about potentially going back in and then coming back out. So that's why I said this doji candle means that there's some indecision happening. But let's remember, we didn't have any news. We had CPI, PPI earlier in the week, but today we had OPEX, right? So options expiration. And if I remember correctly, we had about 1.7 trillion options contracts expiring, and so um, that's a lot, right? So we'll see what that did for us. But again, like I said, it was kind of a nothing day here. Did have one trade that was a legitimate one, and then one that was kind of a gut trade. But it was legitimate, but it was a gut trade. So we'll talk about it when we get down in there. So let's go and let's take a look at what our 5-minute chart looks like. Now, most of the action today actually happened before DR setup. Okay, so if we let's get our 5-minute together here. But real quick, if we look at before 9:30, our DR sets up at 9:30 to 10:30. Right, this would be our DR setup. If you look what happened before that, around 8:30, 9 o'clock, we had this massive move down. That really was the move of the day. So if you were trading early in the morning and you had a entry signal there, that was pretty good. You were in good shape. Looking at today, looking at just the New York session for DR, 9:30 to 10:30. That was a little interesting, right? Because one of the things that I look at is where the range is. Okay, so if I look at the range, like, so we went from 44, let's say 44, 45.14, and that goes up to 45.26. So only a 12-point range. All right, which again, normally we like 16 to 20 plus. But here's the other side of it that was even more interesting. And if you look at where IDR is, okay, we had 45.23, let's say down to 45.17. So what's that, 6 points? So we only had a 6-point range inside the IDR window, okay? And if you think about it, that means that at the top side we'd have to go, I think it was 4 points. We'd have to go between IDR and DR, and I think it was 3 points at the bottom to go, right? So we had 7 points of range that we would have to get through to confirm. Well, 97 points of range, but we had 4 at the top and 3 at the bottom. We'd have to go through to confirm. And so right around 10 o'clock, I started looking, going like, man, we really need to, not only was our overall range small, right, only 12 points, but our internal range, our IDR range, was even smaller. So they actually did fake me out, because I thought this candle, when it started coming down about 10:15, I was like, okay, they're going to go ahead and put us down here and at least close the bottom range, okay, which happened until about 30 seconds left in this candle, and prices move right back up. All right, because remember, what our IDR is measuring, okay, what this dotted line is measuring is where that candle body closed, the lowest, in this case, the lowest candle body closed between 9:30 and 10:30, versus the lowest wick between 9:30 and 10:30, right? So you can kind of see this was where the candle body was. So that became our line. Like I said, this one I thought was the saving grace, but it didn't work. Now we did go back up a little bit So we did basically turned around and went back up on these two green candles. This was our original high point for IDR. And then we actually went up a few points, so this became like a 3 point gap, I believe, if I'm not mistaken. But anyway, still a pretty good gap from that perspective. And so my initial thought was, this is going to be a consolidation day, right? And meaning by that is we were going to stay within range and not necessarily break out as much. And if we did, I knew it would take a while for us to get to to up to one either high or the low on the DR side. All right, and so it took us to about actually 12 o'clock. So we're playing around in here, getting kind of bored, right? And then at 12 o'clock, we actually did close above just barely, okay? Just barely above, but it's still confirmation, right? So we're moving to the upside, okay? So we retrace back down, all right? My first order I put was on this candle, and of course, let me start on the DR high. That didn't work, right? The trade kept going down. So I kept moving down the ladder, right? So next rung on the ladder is IDR. We went right past that without picking that up. And so we finally got down to the .5 fib, which we love. And we barely broached it, okay? But I go ahead and put my order on. I think I was like a quarter point or half a point above that line. And so that was about 45.20. And so we just let it play itself out, and it went back up. Now, a couple of things that happened, and I want to talk about, because I only took 5 points off of that trade, okay? Even though this trade technically went up to 45.33, so that was a 13-point trade, right, if I ran it all the way up, okay? Now, why did I only take 5 points, which would have been 45, I got in at 45.20, so I got at 45.25, which was right here below. Actually, it was right below the DR. Okay. Now, why did I do that? All right. So two things happened. One, there was a. Let's see where. Let me draw it out here. So right here, and these all went away because, of course, the price went through this, and so of course, I can't draw straight. But right here was a bearish fair value gap, which means price wants to come that way. All right. And we had gotten, we went up, and so you can see right here, that's where we actually went up into that gap, even though it was above a confirmed high for us. All right. So the only reason why I took this trade, right, was because we actually came all the way back down, because I wasn't expecting to get filled up here. I was trying to follow the rules, but I had to do, if I got filled up here on the DR, it would be a pretty strong possibility that I would get stopped out because of this bearish fair value gap. All right. So reason why I shot out here, because I'm like, I don't want to go up here and play with this fair value gap, because it could have simply just turned around on me really quick. Okay. Now, that was my choice, right? Because I could have said I'm just sticking to a truly the DR standpoint, but I was like, nope, let me use my other confluence markers and indicators and do it that way. When I got in the trade, there was actually a fair value gap right here. So I was actually expecting it to get filled on the IDR line for it to go back up. Okay. So that didn't happen either. But anyway, so you get the idea. So I was really, not saying intimidated, but I didn't want to take a chance on that that bearish fair value gap. All right. So I got out of the trade 5 points, and just kind of said, all right, well, I'm okay. Watched it go all the way up. I get 13 points. Came back down. Never came back down below DR. Okay. Did not come back down below DR until way over here. Now, at this point, that fair value gap is gone, right? Because we've gone through it, so it's no longer valid. All right. So right around 3:30, remember we're talking about OPEX. Okay. OPEX means like 1.7 trillion contracts that are going to expire. That means that they have to get settled. So we start seeing movement like this right around 3:30. Okay. Quick move up, and then a move down, Now, if you look at where we actually came down to, down below IDR on the high side. So now that's three. Now remember, I don't like taking trades after 3 o'clock. Now I did it today because I knew that it was OPEX. All right. And I know that, well, two things, right? So one is OPEX, which means that the last hour of the trading day is going to be a massive amount of moves, okay? Because they have to settle these contracts, all right? And these are the big boys, right? 1.7 trillion, a lot of settling going on, okay? The second thing that I know is that at 350, basically every day, they have to settle the daily contracts, all right? And what's the market on close number. And so when we came down at 330 and we went down below this IDR, I said, well, I'm going to take a chance. Now I did not do this on the future side. I took a options contract for I think I did a SPY, so I correlated the number to the SPY amount, and did an order here from here, and ran this back up right at 350. So in my circles, we call that a Deegan trade, like a degenerate trade. So you're just taking a trade just by gut feel, and you're willing to risk it all. So I had option contracts that were on the Spy World were like 20 bucks each. And those, in about 5 seconds, they ran to 100% gain, so it's about 40. And then they came back a little bit. And then right around 355, right before market closed, they got up to $80 a contract. So it's about 300%. So I just closed those contracts at 300%. Right? Could I have done it on the future side? Yes, I could have. But again, that's, the risk, the reward to me on that side wasn't worth it. But on the option side, because the most I was ever going to lose was $20 a contract, right? I could lose a lot more than that if the market decided to tank on me in the last 10 minutes. So anyway, uh, again, definitely not a. It was a setup as a DR trade, but I didn't take it as a DR trade. I took it as an options trade on a different instrument. I did call it SPY, and again, was willing to risk that. It could have went to zero, and I would have been okay with that. All right. So anyway, two legitimate trades today. Hard. It was, it wasn't a fun day. It was just it was kind of a boring day, honestly, until like after lunch. All this right here, which we kind of called it in the morning, and wasn't expecting much. All right, and I call it Consolidation Nation. We did that for a few hours, and then we actually made the move. So anyway, that's it. Overall, good week. I haven't really done my like count my gains losses yet this week. I'll do that over the weekend before Sunday. Another thing we'll do, of course, is we will do high time frame chart setups on Sunday. Highly encourage you guys to do that as well. We are in the middle of November, so you can, if you haven't done your monthly, you can use your monthly to start, and then you go, of course, go out to the weekly and reset your. I always go back and reset my buy side and sell side liquidity lines if I need to, or add new ones, and then down to the daily so I can see all those things. So just looking at where we are right now, we still have weekly buy sides up at 45.66, and we don't have, well, again, I have to go back and look at the weekly, but the current daily sell side is way down at 43.54. So that's what 200 something points difference. I'm sure there's, well, I got to do it. I can't talk about it without doing it. So as I look at this, let's see. Well, I'll tell you what, we are not far off. Um, we will add a new sell side, buy side for this week. We'll add a new sell side, a new buy side for, and this is weekly. Boom. So 45.28 to 43.54. So whatever that gap is, so a little less than 200. So yeah, we'll see. We'll see where we go. All right. So, but overall, you look at the weekly, the last 3 weeks, we've had that up move. All right. Still going up into these buy sides up top. So Expecting some reversal. We do have a weekly bearish fair value gap up there above that monthly buy side. So again, not sure where we'll go, but we shall see. We will, yeah, we'll definitely see. We have a new weekly buy side, new weekly buy side line, and we also have a new weekly fair value gap on the bullish side. So this will be interesting. Anyway, all right, guys, I'm not going to hold you guys. Okay, have a great weekend. Love on your loved ones. You never know when you won't be able to do it again, so take advantage of each and every opportunity. Shout out to my man Tim for giving me a shout out on his live. If you're into ICT and really want to learn how to do it and how to start from the basics and really take a more natural language approach to ICT concepts, go check out Tim's channel, the new TLR. Yeah, the new TLR. That's his YouTube channel. A lot of good information. He goes live all the time and all that good stuff. So, our strategies are different. We respect, trust me, I respect the heck out of ICT strategies. I use fair value gaps all the time as confluence markers for me. And he understands what the DR world is, just different strategies. And so for me, working and, able to set alerts and do those kind of things and just kind of trade when the market tells me to, works out best for me. But anyway, it's always good to learn different ways to leverage this market to put some money in your pocket. By the way, Apex, if you are looking to get into futures, Apex just launched their 90% off sale. So basically, you can get a $25,000 evaluation account for probably like $15. I think you can get a $50,000 evaluation account for probably like $19. I think it is less than 20. I'm sure. So I will I do have a affiliate link for them. I will put my affiliate link in the. I guess I do it in the what the thing's called, the profile. I guess we'll see. I'll figure out where to put it and let you guys know. And then also Monday, TradingView has their Black Friday sale starting, which is 70% off. So that is, you can get a year of TradingView. Can't remember the exact number, but it's very, very cheap. And you can actually get like the full blown TradingView at that time. So I'll put both of those links in there. You could use them or not use them. I'm not. I don't think I've actually ever made money off my affiliate links, so I'll put them up there if you just want a link to where to go to get access to it. But that's just information for the community. All right, I don't make any money off of this, and I'm a firm believer in I kill I eat what I kill. All right, so if I don't trade it, if I don't make it in the market, I don't get it. Right, so if I lose, I lose. If I win, I win, and I can sleep well at night. All right. Anyway. All right, guys. You guys appreciate all the support, and looking forward to next week. We'll see what happens. Any questions? Put them in the comment section. I will make sure I go back and answer any questions I see there. And that's it. You guys have a great one, and we will talk to you on Monday. All right, y'all be good.